If you are thinking about buying a house in San Diego in 2025, you are probably hoping that prices are going to go down. I mean, interest rates have got to be coming down, right? And we might have a recession, which would bring prices down, right? And I mean, really, who can afford to buy a house in San Diego anymore? So, like, prices have to come down just because no one can buy them. Well, let's look into all those and see if any of them hold water. Let's start with interest rates. We've been waiting for rates to come back down into the fives for at least the last 6 months, expecting it to happen. But instead, they keep going back up. Right now, they're in the 6.5 to 7 range. And I don't want to be the bearer of bad news, but I don't see that really changing anytime soon. First off, let's be really clear that the interest rate that lenders charge you to loan you money to buy a house is not the same interest rate that you hear about when you hear that the Fed cut the rate by a quarter point or a half a point or whatever. Those are two different rates. The Fed funds rate is the rate that banks charge each other when they borrow money from each other overnight. So it's a super short-term rate and has very little risk built into it. A mortgage, on the other hand, is like 20, 30 years long. So there's a lot more risk baked into it. The rate that you pay for a mortgage when you are buying a home is more tied to the 10-year treasury bond. And these two tend to move in lockstep. But let's talk about what's happening with those rates right now. We were hearing that the Fed was going to cut the Fed funds rate. And they did cut it once, I think, and they were going to be cutting it more this year. But that was when inflation was expected to keep coming down. And unfortunately, this last inflation report actually had it go up by a tiny bit, which threw everything into chaos and basically has made it so that the Fed may not even cut rates this year at all. And it's really going to depend on what happens with the rest of the year to see what happens. Like at this point, I don't know, like it's hard to just make any predictions at all because God only knows what's going to happen. We've got the avian flu, which is making egg prices go through the roof. We have tariffs that are actually starting like right now that are going to make prices continue to go up. We have housing prices going up because we're in the spring and that's what housing prices do. They go up. And all of this means that it's pretty likely that inflation will go back up. Now, we don't know what's going to happen, right? The current predictions have the rates staying about the same. The expectation is they will still go down a little bit by the end of the year. You can see here there's a little bit of a drop, but it's not big and it's certainly not enough to wait to buy a house based on the interest rate. Let's talk about what happens if there's a recession. The overwhelming belief is that a recession means that housing prices will go down. And I am here to tell you that is not correct. Historically, in every recession except 1.5, housing prices have always ended up higher at the end of the recession than they were at the beginning. I'll give you one guess as to what that one exception was. It was 2007, 2008. And that recession was caused by the housing market. So yeah, prices went down then because the market was crashing. The recession was actually because of houses. It wasn't anything else. The only other one that there was a little bit of a change was in like 91, I think. And that was like, it went down 1% or something. So it was essentially flat. Every other one, prices have gone up, including 2020. We had a recession in 2020. People forget about this, but there was a recession and we all know what happened in 2020. Prices freaking skyrocketed. So do not expect if we have a recession that you're going to get some break in prices. And why is this? The reason is if we have a recession, if the economy slows down, the Fed then tends to lower the interest rate to stimulate the economy so that people spend more money, which then can have a trickle-down effect to the mortgage rate coming down as well, and then people buy more houses. This is exactly what happened during COVID. Of course, we don't know if there's going to be a recession. I personally think there is going to be. They have now predicted that the GDP is actually going to be negative growth this quarter. If that happens 2 quarters in a row, then we are in a recession. With all of the layoffs that I'm seeing, not just all the federal ones, but I am seeing company after company after company do layoffs. That is usually a pretty good leading indicator. So personally, I think we're heading into a recession, which likely means that prices will continue to go up. The big question is, how do people afford this? Well, I know it seems hard, but let me give you an example so you can understand. In order to afford a $1 million house, you need to be making about $250,000 a year, which sounds like a lot of money for one person. But what if you have 2 people in the household and they're each making $125,000? That's like the average salary for somebody at Apple or Cisco or Google or any of these tech companies. So basically, all the people in the Bay Area, they make that or more. All those people love to move down here, and those tech companies are coming down here. So Qualcomm, that's their average salary. So all of those people, if they have 2 people in their household and they're both working at Qualcomm, for example, they can buy a $1 million house. So I know it might feel like there aren't that many people who can do it, but there's actually a lot of people who can still afford those houses. Not to mention the investors and the people who also have just a lot of equity in their current house and can sell that house, take that equity and buy the more expensive house because their payment's not going to be as much because they have a big ass down payment because they got all this equity from the past 5 years. So we saw a huge drop in demand in 2022 and again in 2023 when interest rates went up and then went up again. There were like massive drop off. And that led to, in 2022, prices actually went down 15%. Like there was a huge correction that nobody believed me about and nobody listened to me and nobody even pays attention to. But there has already been a correction in the market. And within a year, everything had recovered. But part of the reason that it recovered is because those who do pay attention and do see prices drop at all, they immediately come in and snap up those properties knowing that the prices are going to go back up again. Everyone saw what happened after the Great Recession. People made money in real estate hand over fist. So they're all waiting for the next time the market crashes, just like you're waiting for prices to go down. So are about 1 billion other people who are just waiting. And as soon as the prices come down, they're just going to be driven right back up again because that's what everyone's waiting for. By the time you realize that the prices have gone down, you're probably going to have missed it already. So don't try and time the market. It just does not work. What does this all mean for what we should expect this year in San Diego? Well, Zillow is predicting that we're going to be the 19th hottest real estate market in the nation. And they're expecting prices to go up by about 3.6% this year. So 4-ish percent, which is a just totally normal market because that's normally what we see. Conversely, this past year, we saw prices go up by 6%. So it was actually still even a hotter year than a normal year. And expectations for home prices nationwide are that prices are going to go up about 3 to 4% every year for the next 5 years. This means that if you purchase a house this year, you could see a 15 to 20% increase in the value of that home over the next 5 years. Let me put this in real numbers so this really makes sense for you. If you buy this year, say you bought a $800,000 house this year, that 15 to 20% increase is $160,000 that you could make over the next 5 years just on the increase in equity. Or you could pay $3,000 a month for the next 5 years on rent, and not even counting that your rent will go up each year, you can pay $180,000 in rent. So you can make 160 or lose 180. Up to you. The great news is that we do expect more homes to sell this year than last year, which means more choices for buyers and also hopefully less competition than we have seen in past years. So it's not the crazy bidding wars and all of that. So you might actually be able to get a decent deal. And along with that, we're seeing houses sit for a little while longer. So you actually get to see them maybe even a second time rather than having to make a decision after seeing the house for 5 minutes, which, by the way, super sucks. With less competition out in the market, you might actually be able to negotiate an interest rate buy down where the seller pays to lower your rate that you get on your mortgage. If you want more information about that, just send me an email and I'm happy to give you all the details on how an interest rate buy down works. It is possible to still end up in a bidding war, but you're usually going to be in a war with like one or up to 5 other people, not 10, 20, 30 other people like you have been in years past. So, what to expect? Expect prices to go up again this year, likely at a much more normal rate than we have seen in past years, and likely at a greater rate than inflation. Interest rates will likely be flat to maybe a little bit down. If you are thinking about buying this year, but you're really just not sure if it's the right time, scan the QR code, set up a time to talk to me. It's for like 15 minutes. We can just talk about your situation and I can give you some input as to if it makes sense for you to buy now or if you should wait. Buying isn't always for everybody. It doesn't always make sense at, any given point in your life or in your given situation. So, if you are having trouble deciding and you want another opinion, happy to chat that through. I'm not one of those people who's going to like push you into buying if it's not the right time or anything like that. So no pressure, just a quick conversation. I hope to get to talk to you soon, and check back so you can see more videos where I am talking about the different neighborhoods in San Diego.